So David, this social credit scoring system has garnered a huge amount of attention since it was announced a few years ago. It's been described as dystopian, Orwellian. How exactly does it work, and what is the rollout timeline?
Right, so I think the first thing to understand is that a FICO score is your personal credit history. Now, this doesn't exist in China for most consumers, so a lot of the private technology companies such as Alibaba, Tencent, JD, who already sit on top of so much transactional data with their digital wallets and commerce platforms, saw an opportunity to build a credit score or trust system from the ground up for their consumers. This encompasses far more than just your personal credit history, but also your behaviors, e-commerce purchase history, level of education attainment. And for the consumers, you can do a lot more with it than just what a credit score would be able to provide.
So Alibaba has its own credit scoring platform, Sesame Credit, for buyers and sellers.
Right.
And the Chinese government is trying to create their own credit scoring system. I think there's been a lot of confusion between the two.
Right.
So is the government going to be incorporating private sector data in this national plan?
They may, but I think a lot of those plans have been a bit overblown, so the government has not done much other than say they may consider doing one. What has been very pervasive now is a lot of these private companies building ones with their own current platforms. So you mentioned Sesame Credit, which is the most widely used one because it has a very tight integration with Alipay, which is the most used mobile payments platform. So with the Alipay platform and the Sesame Credit platform, if you shop on Taobao, for example, you can pay for a certain purchase in installments if you have a high enough credit score. You can unlock a mobike without a deposit if your credit score is high enough, and you can get access to certain credit products if your credit score is high enough. So it's more of a business decision rather than a governmental decision.
Now, for this national credit scoring system, what are some of the metrics that determine if you're trustworthy or not?
Right. And I think that's where a lot of the controversy is, because a lot of these metrics that are taken into account are where you went to school, if you have a criminal record, have you repaid your certain loans. And I think a lot of these data points in the U.S. are seen as very personal privacy issues, but what we have to understand is that if you don't have a credit history, there are no other ways to assess someone's trustworthiness.
Now, what about how it's played out so far? There have been a lot of reports that people are being banned from air travel, from train travel. It's still nascent, but we're seeing some results.
Right. No, that certainly is true. And I think one of the most high-profile cases is the CEO of a Chinese company called OFO was recently banned from making certain purchases because his company was bankrupt and default on certain loans. And I certainly think that if you are in the U.S., certainly if you don't repay certain loans, you should be punished. In China, I think they're trying to build this trust system within not only businesses but also consumers.
Not surprisingly, this has garnered a lot of controversial attention. What are the dangers that this creates a sort of stratified society of the haves and have-nots? And has the government outlined any recourse if someone is falsely punished?
Right. Again, taking a step back, when you have a society with no credit history, you're denied a lot of basic financial products. So for example, in the U.S., credit card penetration is around 80%. In China, it's around 12%. In the U.S., we also have a lot of folks that fall outside of the purview of FICO scores. 62 million Americans with very little credit history, 30 million Americans with no credit history. Whereas in China, because you're able to build a credit scoring system from the ground up, yes, you take in a lot of these data points that we would deem as private, but it's actually building a lot more inclusive of a credit system because everyone can have access to it based on certain behaviors.
Right, you make a great point that in China there was no pre-existing credit scoring system, so they have to build it from the ground up. I mean, how would you compare and contrast this to the system we have here in the U.S.?
Certainly a lot of cause for concern taking into data points that we would deem as private, but if executed correctly, could be a net positive and could be a learning point for a lot of U.S. tech companies. For example, these underserved populations, if we can take into account data points that FICO did not take into account, we could serve a much broader pool of consumers. I mean, take SoFi, for example. When we first started doing personal loans and student refinance mortgages, we took into account data points that banks didn't, like where you went to school, where you worked, and we were able to serve a population that traditional banks couldn't serve. Right,
there's certainly a large underserved population around the world. If this goes over well in China, how do you see private companies and other governments learning from it?
I definitely think there are a lot of learning points from companies all over the world. Like I mentioned, in the U.S., there are a lot of people who don't have access to financial products that we would deem as very basic because we have no way of underwriting those people. If you could, not suggesting this, but if you could take into account whether or not someone has paid their parking tickets, whether or not someone has made good purchasing decisions, and then offer them financial products based on that, I think you would build a much more inclusive ecosystem.
Are we seeing tech companies do this right now? Facebook had this patent a few years ago that would allow lenders to reject your loan if based on the creditworthiness of your friends.
I don't think they've done anything with it. Companies file for patents all the time and don't do anything with it. I don't think they'll go that far, but we're certainly seeing a lot of tech companies, both early stage and late stage, using non-traditional means of underwriting and doing credit products for folks that traditional banks wouldn't touch. SoFi being one example, Bill.com on the B2B side, Affirm, which is doing installments for purchases, allowing people to pay for things in installments, and the interest rate they'd pay depending on things that are not just your credit score. So I certainly think that a lot of U.S. companies are taking note of what's happening in China.